This video is all about company cars, the taxation of cars that are actually in companies. So I'm going to look at electric cars, hybrids and fossil fuel cars, and vans on commercial vehicles. And I look at the different taxes, the benefit in kind to the person who uses the car, the expense of the cost of the car, and also the VAT. And then I can have a look at how you should finance the car, and also if it makes a difference if you've got a low or high mileage. I do regular updates on tax and accounting issues, so if you'd like to be kept up to date, then please subscribe to the channel, and if you press that like button, it helps me and the channel get my message to further afield. So, company cars, this is getting to be an increasing and changing way of doing things, because what is happening is that electric cars are becoming more mainstream. And the tax on plug-in electric cars is very different to the traditional car, because in a company you can get the expense of the car is allowable for corporation tax, so it's tax allowable in the company, and there's a very low benefit in kind charge, so you have very little personal tax to pay. And that means that for a lot of people, they are buying their electric cars in the company. Now this is different to fossil fuel cars, because for fossil fuel cars, and actually for a lot of hybrids, the benefit in kind charge is very high. The way the benefit in kind works is you take the list price of the car, so it's not what you bought it for, it's the list price, and you multiply it by a percentage. Now, for a plug-in electric, that percentage is 1 or 2%, so there's very little, no meaningful tax to be paid. But for a sort of even a fairly moderate car, it's into the sort of mid-30s%, and that's the tax charge. So that's the benefit, and then you pay the tax on that benefit. So if the car cost £50,000 and you've got a 30% benefit in kind, there's £15,000 of taxable benefit, and then you pay tax at your highest rates on that £15,000. And that normally means that anything other than a plug-in electric or something that's really super economical, it's best to have it privately, and privately rather than in the company, because the tax in a company is just too high. For VAT on cars is never allowable, so you never can claim back the VAT on cars unless you run a car hire business or a taxi company or something of that nature, which we don't have any clients who do that. The VAT is different, however, on commercial vehicles. So commercial vehicles, a van has very low benefit in kind charges generally. You can claim the VAT back, but you end up running a van, which not everybody wants to do. And the definition of a van, and there is actually a list of what is considered to be a van, but generally you need to be able to put a ton on the back, which is why some people have pickup trucks. But you've got to be really careful with pickup trucks just to make sure it's allowable. So those are the sort of like the main drivers. Sorry, the pun was unintended. It does matter though when you finance it, just how much you use a car. So I will always buy a car because I like to buy it at the end, and I don't like to change my car very often. But I accept there are some very good deals on leases, because the car companies basically want you to do a lease, so you change the metal every 3 or 4 or 5 years. But I don't want to do that, so it's better for me to own it. And it's better for me to own it because I tend to scrape my cars, and if you scrape your cars, then the cost of sending the car back becomes really expensive. And people, so I think that finance bit, it depends if you've got the money, and also it depends just how you think about cars. And whether you want a lease or a PCP or whatever, HP, it really depends on the deal and on your personal circumstances, and there's no way I can give some generic opinions in a piece such as a video such as this. That said, there are some peculiarities. So for example, if you do a very high mileage or a very high personal mileage, then that can distort things. So if you've got unusual circumstances, that can affect the calculations. Very high business miles business and personal miles can mean that cars are maybe better in your company where you take the risk, where the risk is taken in the company, which might be what you want. And that is actually a general thing with PCP plans and leases, because with a battery car you're not entirely sure, because it's new technology, just what will be happening in 5 years' time. Will the battery still work? Will you get a good price for it in 5 years' time? But if you've got a lease, it's somebody else that's taking that risk, and that can be an important part of the equation. So I hope this helps. Taxation of cars in companies is a really important issue because cars are an expensive item. If you'd like to get more information, then please get in touch with us. But we do regular updates on tax and accounting issues. So if you'd like to be kept up to date, then please subscribe to the channel, and pressing the like button just helps me. Thank you.